All right, I think we're live. Thank you. Welcome everybody to the webinar that we're about to host here. Really appreciate you spending the next 30 minutes with us. Got a special guest with us, Ben Murray, friend of the company, friend of the fam, also known as the SaaS CFO with us. I will share my screen here in a minute. And then we will get off to the races. But Ben, while we're doing that, why don't you go ahead and give everybody an introduction about yourself, and then I'll introduce myself.
Yeah, greetings everyone. Great to be here. Thanks for joining this morning. Calling in from my kind of messy home office here, some paperwork there in Scottsdale, Arizona. But yeah, I'm a SaaS CFO by trade. If we haven't met on a webinar, in person, or event, and did that for a while, and now offer fractional CFO services, coaching, academies, teach SaaS metrics finance, newsletter, podcast. So live and breathe SaaS B2B finance.
It's a fun story about the first time I heard about you, Ben. So I was at the time, and this will be my introduction as well. I'm Jon Cochrane. I'm a recovering controller, current GM at Maxio. But when I was a controller, my CFO sent me this link to a blog post from the SaaSCFO and went, "Hey, how are we defining ARR? How are we reporting out our metrics? Check out this blog. The way this guy's doing it is the way that we need to do it." And Ben, that was your blog. So that was my first introduction to all of your content that you've been putting out for the last decade plus.
Love to hear that. Yeah, I'm glad it's helping.
Very helpful. It's some of these things are becoming a little more call it standardized, but at least when I was doing my controller duties at the time, it was a little, we used to joke that I'm curious what you think of it, but we used to say, SaaS metrics are like the Wild West, but I don't know, are they getting a little bit better these days?
Yeah, they're getting better. They still can be the Wild West. You can create them a lot of different ways, a lot of different data sources. Now, maybe, today we'll talk a little bit, the definition of ARR is a bit of the Wild West. But yeah, still can do things a lot of different ways with no standards.
Well, that's a good segue into some of our content that we're gonna cover here. So one of the areas, there's always a lot of pressure around the monthly close, and one of the topics that we wanted to get into was, what does a great monthly close look like? And then we'll get into why speed to close is so important, and then when we talk about the definition of ARR, how you define ARR is really important, because at some point you're going to be expected to do a bridge between ARR and ARR and your revenue. And then, we'll share some best practices on how to do this at scale. But let's get into our first topic here and talk about, a great monthly close and what that looks like. And before we do that, one thing I'd like to encourage the audience to do here is, first of all, we're going to put up a poll here and ask everyone, how long does it take you to actually close the books every month? Just so we're kind of level setting and seeing where everybody's at. But one other thing I would encourage everybody to do here is in the webinar, you'll see a chat and Q&A. Please put questions in there throughout the webinar. Ben and I will take those as we go. So if anything's getting interesting, or if we're not talking about something, we'd love to get your questions, and it always makes it more engaging. So please, we're going to put up that poll right now, which should be live, and ask questions as we go. So while that's going, one thing that I thought would be fun to share with this group is what a poor revenue close looks like. And so, as Ben and I were talking about the content for this webinar, one thing that I did is I digged up my old metrics when I was a controller at the time, and I pulled up. I remember when we were trying to close the books, and I had a scorecard here where whenever I took it over, we were having a really hard time closing the books on time. And so if you look on that graph there, we had, when we started tracking this, it took us 30 days to close the month. And some of you might be going, well, that's a problem. If it takes me an entire month to close the prior month, then I can't even report out how we did in the prior month until we get to the next month, and we are struggling big time. But one thing that might, the thing that we always put out there was, we've got to hit a 5-day close. And Ben, question for you is, 5-day close, at least to me, it's always been the standard. But why is that the standard? Why are people so obsessed with a 5-day close?
Yeah, I know, and that's what I always shot for as an in-house CFO and de facto controller. Was always the 5 business day close, and I don't know because it's nice and even. It's a week, it's five. That fits nicely Monday to Friday or whatever that close calendar is. But I think it's itching up. I think the standard is getting a little bit higher because right after the 5 day close, then there's a lot of more work, right? Then the FP&A process kicks off and board reporting and forecasting. So it's like it has to be condensed. Otherwise, for those folks, I don't know if anyone FP&A folks in the crowd, like, if you start reporting on the results and like John, with that 30-day close, I don't want to report on results that old because then it just feels stale. I feel like I'm just going through the motions at that point.
Yeah, no, I totally hear you. One of the, Alexi actually just asked a
Hmm.
question in the chat here, and so Alexi, your question was this the entire monthly close, or is that just the revenue close? And fun fact to dive into, to double click on this graph, I actually brought over our detailed scorecard, and so to answer your question, this is, again, same thing, but a double click into this. And this was the entire monthly close. So when you think about a full close process there, that included how did we close AP, how did we close
Hmm.
cash, the flash report, all the way down to like issuing the financial statements. And if you can see, our goal here on the left, we stated how many days post following the end of the month do we want to hit, and you can see how many days it took us. And so, we just kept tracking this month over month, and tried to knock this down, one at a time. And Ben, another question for you is like, you were talking about stale numbers and stuff like that, but if it's taking you this long, you think about kind of the health of the business and stuff like that. What are some of the things that are at stake if you're not doing this quickly?
Yeah. Yeah. And Alexi has another great follow up question, which we'll take in a second. But yeah, I think it's a whole ripple effect. Everything pushes because, say, if you're under PE ownership, you probably have a monthly review call with those folks at some date, during the month, so you've got to hit that. So there are all these there's this whole monthly financial cycle that pushes and all these dates. Maybe we have covenants, different things that we have to choose for our lender. So there's a lot at stake post close. And board, our executive team, and all that stuff, and just our reputation doesn't look great as a CFO and or controller. If we can't have our own department in order. So yeah, there's just so much downstream impact. If we can't close timely and with quality numbers.
Now, I remember these months intimately here, kind of the red, just like a sea of red, and red eyes, because I was also getting to the office so early and leaving so late, trying to get these things wrangled. But when we think about actually having a great monthly close, Ben, I'll toss it back to you. We kind of flagged in here, how do you shift from poor to great? And we kind of have narrowed in on 3 things, but maybe it'd be helpful to have you share some of your insights and the conversations that you're having with folks today about, just some of the tools coming onto the market. But when you think about shifting from poor to great, what are some of the things you need to start thinking about?
Yeah, yeah, and Alexi, just to answer your question, like 5 days usually was you have an in-house accounting team, and I work a lot with outsourced accountants and bookkeepers, and generally for them, my target is kind of mid-month calendar month to close the book. So yeah, definitely great question. If you're fully in-housed or outsourced, you know, definitely have different expectations, but in-house for sure 5 days. And John, yeah, we can all do this for a great close in 5 days, but that also means like we're reconciled. We're not just scrambling to get those financials out the door, but then we haven't reconciled our sub ledgers, and done everything behind the scenes to support those numbers. So it's a controlled close in those 5 days, right? Revenue close, AP close, and with the poor close, it could be disconnected. We don't have tech. We're not reconciling our balance sheet. And now with great, we have a good sometimes it's just good old fashioned process, but really we need the right tech in place to do this, and it's connected. Because maybe an average close, we have some tech, but they're not connected. But now is our CRM system talking to our invoicing system, our subscription management system, posting that to then our accounting software. So we have interconnected software. We have all those right point solutions in place to handle invoicing, revenue recognition, commission amortization, and we close the books with great numbers. But then also now we're providing quality data for all the stakeholders in the business. And that's the big thing. We're not just thinking about, oh, I need to close the books in 5 days and push out those financial statements, I'm done. But now there has to be quality data underneath the close, underneath those financial statements that everybody needs, our board, our leadership team, FP&A, our lenders, whoever it is. So it's thinking about the whole financial cycle and how we play a part in that.
Yeah, it's interesting that you talk about that, Ben. So when we're thinking about having the right tech in place and providing data to some of the key stakeholders, I do feel the quality of that data. It's pretty. It's like how many people are pulling up the spreadsheet or pulling up the system to actually run the business from that. And to me, that's one thing. For the people who are listening here, I think about some of the different businesses that I have been in. And when you really know that you're making quality decisions from, call it the data or the connected systems, kind of that environment where like, hey, I can do this quickly, accurately, and efficiently. Many times when you're pulling up the system and everybody knows, hey, to get the source of truth, I go to this system, and that system has been vetted from finance, vetted by finance and kind of signed off from them, because generally there's kind of I don't want to call it an audit, but some sort of like validation that, hey, these booking numbers or the ARR, the revenue is accurate. I've been in a part of other companies where, if you're not making the decision from the system itself or pulling up kind of a source of truth that multiple people have access to, or say the different go-to-market teams have access to, then what's practically happening is you'll have the meeting, the executives will get together, they'll have the meeting, they'll look at the CFO, they'll say, hey, what happened over here? And there'll be a question, and then that question will inevitably get rippled down to the individuals on the team, and then those team members will need to slice, dice, et cetera, pull together the new spreadsheet and send it back out. And just that process itself can take many times at least a day, if not a few days.
Oh yeah, definitely. And we have to think, for controllers, accountants in the crowd here, is just what's coming up a lot lately with me is metadata. Metadata attached to our accounting data, to our invoice data, to our customer data. And that's so important now. It's not just that batch RevRec entry, but all the detail behind it by customer, but now all the metadata associated with it. So we have to think now, just like sales enriching their data and outbound motions, we have to think, how can we enrich our accounting data so it makes it even more useful? And we have to start thinking about, the AI world and the structure of our data too. Now, this is a little bit off script, Jon, but, if we want to have AI as our friend within accounting, and we know it's kind of a slow progression, the more structured it can be, the more repeatable it's going to be. So that's a conversation I have with SaaS founders, SaaS CFOs all the time, is just the metadata, the systems, the syntax. Do we have the same customer name in HubSpot, Salesforce, Maxio, Xero, and just thinking about that data architecture, is really now the controller CFO's job.
So we're talking about, data, metadata, speed to close, different things like that. What I'll do, we're going to shift into, our second topic here, where, speed to close, speed to insight, speed to decision. It feels like everything these days is moving so quickly. And one thing that, I hadn't heard before, Ben, was, oftentimes, when we're thinking about speed to close, speed to insights, who is the team and the group responsible for pulling together this source of truth that could be used in like an AI context or something like that. It's the controller, or somebody who is responsible for reporting out the ARR. And you had a term here, Ben, called the super controller, which I hadn't referred to before, but I will say, if I was still a controller, I would love that term, because I felt like that. And I was always fighting for relevance in the company. And I was like, no, we are so much more. All the decisions are made from our data. But maybe, we have a couple things here between like an average controller and a super controller, but, maybe just tell us a little bit more about, from your perspective, like what is kind of the shift happening between, like the previous controller and call it a super controller before, in the context of some of the stuff we're talking about here.
Yeah. And I definitely didn't coin this term, but you hear this a lot now, as the super controller, and right, the average controller, right, we're very siloed, right? We're just focused on close. We just want to produce those financial statements. get those out the door by date, and then we're done, and and we reconcile and move on. But now, like I was saying, the super controller, we have to think beyond what we're doing in accounting. Who's using the data? Is it going to be used in due diligence? Is it going to be used for fundraising? And that's why I say, like, the metadata, the invoicing. And I always talk about the 4 key SaaS finance data sources for those who are in SaaS or recurring revenue businesses, and one of the 4 is accounting data. Right, so important. That feeds our forecast, it feeds our metrics, it feeds board presentations. So we have to think about the systems, the metadata, the structure, and how can we make this more useful. And like I said, eventually AI coming in to help us with analysis, write those FP&A variances. It's not going to do a great job, a repeatable job, if we don't have the metadata, all that enriched data, structured data to help it. So I think that's now we're here in the super controller where you almost, I'd say you're kind of thinking like a CFO now, and how that data, how can I play a bigger role within the company?
When, Ben, you talk to a lot of different founders and, founders, CEOs, stuff like that. And, we think about, call it quarterbacking the data and having a single source of truth, being able to, being able to have something that really looks like best in class. What's that when you're talking to different companies, what's that aha moment when you're going, hey, I'm seeing some characteristics where it's like these people have their ducks in a row versus these people don't have their ducks in a row?
Yeah,
room for improvement, maybe I should say.
Yeah. Oh, yeah. I mean, I talked to a ton of SaaS founders, CFOs, controllers, even, funny, coaching session yesterday with the director of customer success, who's very involved with finance and the process and invoicing and renewals. And, when I talk to a new SaaS team, when I'm impressed is one, when they've implemented tech. It's not just their accounting software, and that's it. That's how they're managing their business. And we know in recurring revenue business SaaS, we can't just get away now with just accounting software. So really impressed if they're like, oh, here's our subscription management system. Here's this system. Here's where all this data, we have Salesforce hooked up to Maxio or whatever it might be. That's when I'm impressed, is they've thought about that data architecture, the tech architecture. And then that makes my job so much easier as a CFO, because now I can go to the source of truths. When I talked about the 4 key SaaS finance data sources, another one is bookings data. Now, do we have structured bookings data? Perfect. That's flowing into our subscription management system. My subscription management system, now I can pull out MRR schedules. I can pull out revenue by customer by month. That makes my job so much easier, spins up the data so much faster, and it makes it a repeatable process each month. And that's where I'm impressed. Where I'm not impressed, we just have accounting software. We have really random invoicing. Our invoicing has, it doesn't have the right SKUs, line items, commingled revenue streams, and that's when it gets really difficult.
Do you have, I'm putting you on the spot here a little bit. So, but do you have a real scenario where, say, in these, call it tech forward businesses or something like that, how month end looks different in, like the forward looking businesses versus, say, some of the like, call it traditional, we just have a GL and a spreadsheet? Like, is there kind of a scenario that you've run into where you're going, this is what the, best in class really looks like?
Yeah, and I think it's evolving, but I think anytime you can have that quote cash process in place and interconnected systems and have mapped out the data, the flow of the data, that's when, that's now like, that's a really nice process, right? And a lot of different names for quote cash, right? But we start with the sales process. Now, if you're PLG self-service, it's going to follow a little bit of different data flow, but about the same. But we have this process of data moving step to step, in systems handling each step. And that's when I'm impressed, when they have, for example, CRM hooked up to subscription management. Okay, wow, that's great. At your size, that you're doing more than a lot of other companies have done. You've got the SaaS P&L set up correctly. So that's where I'd say I'm impressed, where they've thought about contracting, they've thought about invoicing. How does this work? How does it tie into our systems versus just that random invoice going out the door with no contract whatsoever?
It's funny that you mentioned contracting, Ben. About a month ago, I did another webinar with two experts in the field. One who's an audit leader and another person who does managed services for clients. And I asked them, if you had to, what is the mistake that second time founders don't make? And what they said was contracts. And I went, really? I'm not thinking product market, we're going to validate different things. They're like, no, contracts. And it was interesting to me because whenever we dove into the weeds of like why contracts, it's, having, yes, you've got to build something that people want to buy. But then the number one thing that can fall apart, down the road is, you run out of cash. But tied to cash and cash flow and the systems and all the things that we're talking about here, having an object, i.e. a contract where like your ducks are in a row so that if you go to raise like the numbers, but the document behind the numbers is rock solid so that your definition of bookings and ARR, all of that ties back to a source of truth so that like you're standing on really stable ground. Because the moment that like you're going through any sort of diligence, if there's a crack in the foundation, i.e. you're loose with your contracting and your processes, it just erodes the value of the business so quickly.
Yeah, and contracting is often so overlooked, and I call that's like the operating manual for accounting, right? We close a contract. That's how. All right, how do we invoice? What are the payment terms? What if they default on the invoice? What do we do? Can we turn them off? Not turn them off? So, yeah, contracting is so important, and also, yeah, when I talk to second time founders, third time founders, what they set up right away is better finance and accounting processes right away. They know or so many founders who have been burned in due diligence because they just weren't set up correctly.
Yeah, there's for everybody who's listening here, this is the contracts so important, but also so easy to get to set up a really good system, and it doesn't have to slow down your sales cycle. There are like really good ways to do this.
Yep.
One of the things so let's shift a little bit here to talking about, Ben, you alluded to this at the beginning of the webinar, but the definition of ARR and some of that stuff. But let's dive into a little bit here, the MRR to ARR bridge. And this is something that, again, a lot of blood, sweat, and tears went into this. And so, story about MRR to, the ARR to the revenue bridge here from living it personally. And then, Ben, I want you to dive into, why this can be so hard. But at one, rewind to a different business at a point in time, there was we had a finance team of about 8 folks. And I remember we would put out, actually same, business that we're looking at here where, we're having such a hard time closing the books. And one of the reasons we had such a hard time closing the books was our ARR that we were putting out there saying, this is the value of our subscription businesses did not reconcile nicely to what we were, reporting on the revenue side. And in a perfect world, these two should correlate really well together, but they didn't. And we couldn't explain succinctly in the terms of like an investor why that was the case. And so what our project was at the time was we took all 8 people on the finance team that was so important to the business. And we literally had a process where we would go through and we were looking at the contracts and we were diving into, all right, you take these 50 contracts, I'm going to take these 50 contracts, you take those 50 contracts, here was the ARR on those, and here was what here was the MRR, here was what the monthly revenue was, and fill in the variance between those two, because we have to make this make sense. And so I think it took us about a quarter of a very intense diligence cycle before we finally got our hands around this process. We could explain what was going on between the difference of these two. But why there was a variance there, and then ultimately put a process in place so that we didn't have to do that project again. But Ben, I'll toss it to you. Why is it so important and why is it so hard?
Yeah, this is just a hot topic right now. A lot of clickbait on social media on this too. And I just presented on how you calculate and define ARR now and with usage-based models at the SaaS Metrics Summit maybe a month ago. And now, even in my student communities and my communities of SaaS leaders, I'm getting this question a lot, from CFOs, from founders. And it's like, what do I include in ARR? And what type of revenue streams, how do I actually just create an ARR number? And, that's where, right, your revenue data is so important, your MRR schedules, your MRR waterfalls by revenue category, by product line. And, one of those gorgeous slides for board meetings for your ELT is that ARR bridge. Especially if you're doing a budget presentation or a variance presentation, is like, all right, here's our ARR now, and here's our ARR at the end of the year. And that bridge of, all right, the ARR, new customers coming in, expansion, contraction, pricing changes, other things that are specific to your business to get to that ending ARR number. And we know if we don't have great data, what happens is we have a final column. Sometimes we have to plug that number because we just can't tie it out. So that's where the revenue recognition is so important, having the detail behind the scenes so we can have MRR schedules, right? Revenue by customer by month, which creates our MRR waterfall, which then, of course, we can calculate retention off of that. And from there, we have the base data to say, all right, if we have subscription plus usage, are we taking MRR times 12? Are we taking a quarterly number? Are we taking a contracted value? And from my research, I found that there are kind of two themes. One is taking either MRR times 12, a revenue-based build of ARR, or a contracted build, looking at contracted revenue, annualizing that number. Plus, if you have usage, do you have a contracted minimum usage, annualizing that number? And then do you have any overages? And then taking a quarterly run rate on those overages to get to an AR number. So we have to have good logic and thought, but to even get there, to get to that point where we're calculating AR, right, we need such good detail coming out of our GL, our subscription management system, so we can have those revenue layers.
When you think about building that bridge, Ben, and I'll share a few stories about what kind of held us back, but as you're talking to different businesses and they're trying to set up their that first bridge or that first process to getting things to work together, what is the, call it number one, number two things that you've seen have held teams back from getting that bridge kind of on a scalable, repeatable process? I mean, obviously we could talk about software and systems and things like that, but I don't know if there's kind of some of those more tactical things within the actual business operations where you're like, this business had a practice of doing X and it was really inflicting some challenges within reconciling those numbers. So either the one or two things that held them back, or maybe the first or second thing that you advise people to dive into when they're working on doing their first, bridge.
Yeah, and that's where just the revenue close process is so important. That's the foundation of having all this data that we can present on, that we can slice and dice, create a supported ARR number. So, right, it's revenue recognition, in place by revenue stream, having all the detail behind the scenes, the sub ledgers, because it, just knowing like, hey, my MRR this month is 500,000 or 2 million, and I don't have any more detail because I plugged that number. I moved a deferred number from my P&L to the balance sheet, which for me that's the opposite way. It's got to come the other way, and we just have this kind of generic number. Like that does not cut it anymore, right? We've got to know by product line. We've got to know those MRR layers, by product line, by ICP, by geo, and all that comes from the revenue close and how we're structuring our RevRec process and the detail, the metadata. And, so we have two perspectives: one, accounting data, and then two, all right, I've got to present on that as a CFO or FP&A, or if I'm the controller and I'm the finance lead within the company, then that's my foundation to present all this data. So it just comes back to that granular revenue data to be able to have then the build for those schedules. If we don't, our life is pretty tough.
Yeah. And that, it's funny that you mentioned the granular revenue data, Ben. That was the number one thing that held us back when we were trying to reconcile these numbers. What ultimately turned the ship around for us was we were able to produce a list, both on an ARR, MRR basis and a revenue basis, where we had, customer, by contract, and by item. We could say, this is what ARR is, and this is what revenue is for those individual items. And once we solved that and we had a really solid source of truth, everything else rippled through from that. And ultimately, in that graph I showed earlier where I was saying, hey, we're charting our way to a 5-day close. Once we had that solved, we ultimately hit a 5-day close by the end of that year. But that was the thing that we needed, because when you think about that list, some of the stuff that would hold us back would be, we have the orders coming in, we're processing them down to the GL, but we had to, we're working with a customer and they made a change in the middle of their contract. And ultimately they had an upsell or a downsell or an early termination, or maybe, we had to issue a one-time credit to that customer. All of those things ultimately are going to be a reconciling item between your MRR and your revenue, depending on kind of what is your policy and how have you defined this is what MRR is for our business. And we had to be able to account for all of that within the schedule. One of the things that we're going to shift to now is ultimately how to do this at scale. And one of the questions I saw from Alexi right now is, hey, what's different? GL software packages, QBO, NetSuite, Intact have been adding revenue recognition modules. How does Maxio compare to those? Does Maxio allow for detailed invoicing for more bespoke deals? James, you followed on and you said, hey, that's a great question. So I'll talk a little bit about where Maxio fits into the frame here. But then Ben, and then what we're actually going to do is we're going to cut over to a really light demo of Maxio before we wrap up today. And so I'll talk a little bit about what Maxio is, kind of where we fit into this. Alexia, it may answer some of your questions, but then Ben, I'm going to toss it to you too, because you have seen and been around this industry for a while. So would love your perspective on that question as well. And let me get my screen share going again. Here we go. So when you think about, so diving into our final thing here, how do you do this at scale? Like Ben was saying, you need your interconnected systems, and really where Maxio sits is we sit between your CRM. You don't have to use a CRM to use Maxio, and then ultimately your general ledger. So it could be a general ledger or an ERP like, NetSuite, Intact, or, a GL such as QuickBooks or Xero. And so basically Maxio provides a single source of truth between those data sets where as your sales team are processing and closing orders, we'll ultimately process those, make sure that your bookings, your billings, your revenue, your ARR, et cetera, all of that's reconciled. And then we'll ultimately push it to the GL so that you can have, your full P&L, balance sheet, et cetera. So quoting, billing, collections, deposit reconciliation, all of that Maxio can handle and does handle that and has for a very long time. The other piece of it is sometimes if you have your product embedded in your application or your website, we also do that as well through our advanced billing capabilities. So whether you have usage billing, subscription invoicing, call it like your annual upfront contracts, or say a combination of both. Maxio, basically you build it, Maxio can bill it. Then of course, we also integrate with different payment processors as well, either through our white labeled offering Maxio Payments, or you can use a third-party gateway like Stripe. Ben, before I get into the demo though, I do think this is a really great question from Alexi, where, QuickBooks has a RevRec module, NetSuite has a RevRec module. There are lots of different RevRec tools out there on the market, billing solutions, et cetera. I can obviously talk a little bit about Maxio as well, but curious kind of your answer to Alexi's question there.
Yeah, I mean, Alexi, you're right. I mean, there are a lot of RevRec modules out there, and QBO even having a basic RevRec, which maybe is not quite enough as you scale. And even Stripe, right, has RevRec, which I won't talk about here, but so I think we have to look at these systems and ERPs and RevRec modules, and do they fit with our type of invoicing, our type of go-to-market, where we're not forcing their process onto us. Are we PLG or self-service? Are we traditional mid-market enterprise? Are we doing close-won contracts? Are they just signing up on our site? All that dictates then, like, does that fit for us? I've seen a lot of people who may be on Sage, but they're using a different RevRec system, or same thing with NetSuite. And then cost comes into play, implementation cycles, time to value. How can fast can we get up and running? Where sometimes you just need just a really nice core general ledger, and then you can build your tech around that. And I talk about, just like your dev team has their product roadmap, controllers, CFOs, you have to have your internal product roadmap too. You've got to think, how is my tech stack progressing? How is this fitting in? And it cannot be haphazard build.
Yeah, one of the things I like to, if you're an early stage business, you don't have a ton of customers, and cost is sensitive. You're not going to say implement a huge tech stack at that point. Maybe all that you need is a simple GL like a QuickBooks, and there are some basic modules there. But as your business grows and scales, you will reach inflection points where you're starting to have pain around, all right, I've got my business running, but I'm tired of managing ARR in Excel. That would be like an area where you're going, okay, there's got to be a better way to do this. And this is where like a Maxio could come in. Maxio really focuses, we specialize in B2B, software and SaaS businesses. B2B subscriptions, that's with really where Maxio focuses. And I'll show you a little bit here. I'll cut over to the demo so that you can see a little bit more about Maxio. So whenever you come into Maxio, we have different dashboards. All of this stuff is customizable where you can actually see, you can run different reports and you can see key things around, what is we have our flagship report here called our subscription momentum report, where you can see opening, new, loss, expansion, contraction. I'll circle back to this in a minute. But maybe you need to understand what's my churn rate, et cetera. Lots of different metrics that you can put on the dashboard. But when you think about managing your customers, your contract line items, which we call transactions, anything related to your accounts receivable, revenue, and reporting, Maxio has detailed schedules on that. We also, like I was saying, there are integrations between Salesforce, QuickBooks, your tax system, in this case Avatax. But one of the things that you'll see is Maxio creates a single source of truth. And so one of the things that I like to say whenever I'm showing somebody Maxio is, anytime you see these blue hyperlinks, we like to put hyperlinks on everything, because creating that single source of truth between the data systems is just so critical to generating confidence and then making sure, okay, hey, does the number here equal the number there? And then one thing that Maxio does is at the top of every customer and contract record, we have details around, your total transactions, and then how much revenue is scheduled, how much, your billings that are scheduled. Do all three of those reconcile together? Because when you're thinking about that, you have different reports that you have to put out between your bookings, your revenue, and your invoicing, and all three of those have to equal each other. Ben, it looked like you maybe were about to say something there, so I don't.
No, it just makes me think of things, like one thing that comes up a lot, parent-child relationships, you could have partner channels, resellers, and again, it's just that setting up that data foundation, having that visibility, not just, oh, here's my rev rec entry, I'm done. No, it's a lot more than that.
Yeah, there are, I totally agree. And a lot of this stuff changes over time. Like, if you think about inflection points, you might start simple, but it may get complex really quickly. So, or you may need to add different, say, call it custom fields later on. These are things that, Maxio is really purpose built for. When you think about simplicity, agility, Maxio really focuses and is specialized in trying to keep things simple, when many times these things have not been simple to solve historically. But we try to create a single pane here where you can see, hey, what are my details about my contracts? Call it the different line items on the contract, whether it be, my enterprise, my platform, et cetera. What's the billing schedule that I've sent? And we can actually show you, these are the invoices that have been paid. These are past due. These are the ones that haven't been set yet. Just having these easily accessible within a list sometimes can be complicated to get together, or say you have to go to two different places within an application to see it. You can see your revenue schedule, scheduled, recognized, deferred, et cetera, on a customer basis. And then ultimately any payments or anything related there. This is actually, Luis just had a question there where what is a faster and better way to look up a customer? Is there a way to look up by name instead of going through the entire index? The short answer is yes. Up here at the top right of Maxio, what you can do is I can search for a bunch of different things. I can search by customer name, billing name, invoice, whatever you might need, you can, just customize, you can select that in the top right corner and search for it. So I could search for, if I search for academia.edu, this is actually going to take me right back to this page. but it'll take me right to that customer. And one of the things that's interesting, many times people will log into Maxio because they need to go to an individual customer or invoice record because they need to research something. One of the things I wanted to cut over to was the reporting, because this is something that we were talking about where having a single source of truth and reliable data around your ARR and your revenue, et cetera, is critical. And so what I pulled up here, this is what we call our subscription momentum report. And Maxio actually has a bunch of out-of-the-box reports, which we call our one-click reports, where you can see details by, call it your ARR summary or your customer count or your moving average. You can see different things around your revenue, call it your bookings details, your billings details, et cetera. We have a bunch of reports out of the box. We also have quite a long report list as well if you need to dive into more details there. But the report that I always used when I was in a controller role was, our subscription momentum report, where Ben, you talked about how you have to produce this type of report every month, where you have your opening ARR, any new customers, lost customers, expansion, contraction, and ultimately your ending values there. And many times you need to provide a double click within there where you've got to be able to show, not only your total, but let's just say by industry, I need to see, what are the details behind those numbers there. And Maxio makes it very flexible, agile, customizable, to where what are the attributes? When I say customizable, it really uses the word configurable to see what are the variables I need to report on and how do I put those in a format that can be easily viewed and exported. Ben, now we talked a little bit about ARR, the definition of that. What are some of the things that people need to be thinking of whenever they're trying to produce a report, such as your ARR summary?
Yeah, and I have some clients using Maxio, so I use this report a lot. And that's just right. It's just expectations now. And one is just having this. All right, just at a subscription level. We have the waterfall here that I call, new expansion, all that stuff. And then segmenting this by product line or parent versus child. And then also usage, like pulling usage data out, so this is kind of the start. Then do we segment this data, and have different retention schedules off of this data? So again, this is that momentum report, waterfall report, snowball, a lot of different names for it. But this is the foundation for retention calculations, for AR builds, for AR waterfalls, for that great looking board slide. And then of course, thinking about this by product line, by revenue type, even partner versus direct sales. But yeah, again, use this report every month.
Yeah, like Ben was saying, within this one report, within Maxio, we give you a lot of flexibility. So you can choose, what are the different things I want to see within this report. So I was just highlighting, that standard live ARR report. But we actually provide different things such as, what's my contracted, not yet live ARR. And you can see that in some of these sections down below. So highly configurable, lots of different metrics that you can pull in here, whether it be live, call it your committed ARR. Maybe I need details around my monthly, annual churn, or say even, my net dollar retention. A lot of different details that you can get within this report. You can get, very granular, very quickly, by different segments that you need to report on, whether it be the industry or customer. All of that can really be configured and selected here using some of these detailed variables, some of which Maxio will enrich for you. Some of which, you could pull in from your CRM or your GL as well. And so, the importance thing here is, we're talking about ARR. If this is a reliable source of truth for you, that will immediately help you reconcile that bridge whenever you're trying to report your revenue. And this is another report that we offer in Maxio, where you can actually see your billings for the period, your recognizable revenue for the period, along with, your total deferred revenue, and any unbilled AR you may have. So hopefully this is a helpful overview of what Maxio is and some of the flavors that we can show you there. I do see a couple questions in the chat, so I want to pause and take a read on those, and then we'll save maybe a few minutes if there are any other questions, either for myself or for Ben, and then we'll wrap up. So. One question from Mandeep is, does Maxio offer any customization for reseller client level relationship setup? The short answer is yes. I would want to dive into your specific use case to understand that a little bit more, whether you're looking to partner with Maxio from like a reseller level, or like you have clients who are resellers themselves. We've seen a couple different variations by that. Paige had a question, and Ben, this might be interesting to have your perspective on, where by what means can Maxio capture variable usage by product, by customer for invoicing? Can you import a file from your production side, manual entry, et cetera? We currently only get a 1 month end file that off of our production servers. Well, actually, Ben, I might take that one.
Yeah, that'd be a good product question. Yeah,
that's a good product question. So, Paige, the short answer is yes. We some customers, if you have like a single file, what they'll do is they'll leverage an import capability from Maxio. So we have an importer to the tool where people will take like a call it a CSV, and you'll automatically create, you'll create your transactions and associated metrics automatically each month. And so how you can do that is we offer different item profiles in Maxio. And so let's just say in that file, say you had an item called Astonish Enterprise. What we would do is you would import it, and what you could set is you could set default settings, default behaviors for that item, such as here's my revenue recognition template, here's the revenue schedule, or the way I want to recognize revenue, here's my default billing method, along with, here are the different accounts associated with that item. You can have that automatically generated in Maxio, or what you can do is, if you need to get even more granular and say, this is how I want to post revenue, you can actually post revenue schedules as well. With the one big caveat that I would say, anytime you're going to manually post revenue from a spreadsheet, make sure that that is a reliable source of truth. It can be much more auditable and clean to have a system say, hey, this is my systematized way to generate revenue for that usage. The other piece is, if you don't want to use an import file, we do for like usage-based billing, RevRec, et cetera, we do have advanced billing, where if you think of like, hey, based on this quantity times this price, I got to recognize revenue based on actual consumption within a month. We do offer a lot of capability there as well for our advanced billing module. So it can be, like quantity times price, or tiers within that, or say prepaid consumption. We offer capabilities there. And then Pat, you had a question, how can Salesforce admins get more involved on the contracting side, managing renewals, expansions, et cetera? Ben, maybe I'll toss this one to you, because this one seems, many times there can be this relationship between the Salesforce admins who operate in the CRM and the finance team who would operate on like the finance billing subscription systems. And so question for you would be, when you think about the business structure of that relationship between like your go-to-market Salesforce teams and some of the finance teams, what are some of the, like, what advice would you have for Pat?
Yeah, Pat. Yeah, great question, because it sounds like it's more of like tech versus like, how can I get more involved just in helping and facilitating the RevOps process, which is a great question, because really, for renewals, how are we managing subscriptions, renewals as they come up, contract expirations? Is that sitting in Maxio? Is it sitting in Salesforce? Because your CS team needs to know that. Your AEs need to know that. They can't go digging for it. Like, they need to know, all right, here are all the renewals coming up, contract expirations. So is that data readily available? And as an admin, can I facilitate that process, that data process, so they have everything that they need, and they're not manually compiling, digging, finding contracts, renewal dates, ARR numbers, and my, like, the Salesforce admin was my key person within my company as a CFO, because we like spent so much time together, quote to cash process, Salesforce over to accounting, data flow. And so it's like, where's that, one, how does our renewal process work? Who's involved? What data do we need for that for you to get involved? And then expansion opportunities, that depends, right, for that, right, the CS team could be leading that, the AE team leading that initiative. But then, all right, that expansion opportunity, right, getting the right products, IDs on that, incremental revenue, we're tracking, of course, that gross expansion, but we also have to track net expansion. That's so important, because net expansion is the number I need as a CFO. It's great that we renewed them or expanded them, but do we net expand them? So just thinking about the flow, who's involved, do they have the data at their fingertips?
Yeah. When we think about best in class, how do you get from call it a poor close to a great close, or a good close to a great close? That relationship between the Salesforce admins and your finance team, every single business I've seen that operate well, and they are, locked at the hip and working really well together. It's probably, I would say, dare to say, it's probably impossible to get to a great process if those teams aren't working well together, because eventually there's going to be a breakdown there.
Yep.
Well, if there are any more questions for myself or Ben, what I threw up here on the slide was our contact information.
Yep.
So feel free to email Ben directly. Feel free to email myself directly. What we'll do as and Ben put his email in the chat there. I'll put mine in as well. But if you have any questions for us, feel free to contact us directly. Yep. And what we'll be doing following this webinar is sending out a summary of the recording and the materials that we shared here. And feel free, we'll make that all available to you, is what I would say. So Ben, thank you for the time.
Yeah, thanks, John.
It's always a pleasure.
Yeah, always fun. Thanks for joining everyone today. That's my email. Email me anytime, 24/7, and I'll reply. And again, enjoy this today. So thanks for having me on, John.
Yeah, always a pleasure, Ben. And thanks everyone for sticking with us for roughly the last hour. We'll see you on the next one.
Yep. Thanks, guys.